Y continuamos aquí con el economista y por supuesto en el parqué de la New York Stock Exchange. Termina otra semana más aquí sobre el parqué de la bolsa neoyorquina y por supuesto es tiempo para el balance, para el análisis. Muchísimos datos macroeconómicos, también hemos conocido resultados empresariales y por eso vamos a hablar a continuación con Peter Costa de Empire Executions para pasar a analizar todos estos datos. Thank you, Peter, for being with us.
Thank you.
So first of all, we saw the unemployment rate going down,
Right.
9%, but is this because people are giving up looking for jobs or because we are really creating employment here in the US right now?
Well, I mean, you've seen that the numbers weren't, the expansion in the employment numbers weren't really that great. So the way I look at it is that we probably are running out of, people are stop looking for work. That does tend to happen in a recession, towards the tail end of a recession, especially with the weather the way it's been in most of the U.S. has been pretty miserable. So people stepping out of the the employment picture for a couple of weeks doesn't surprise me at all. I think we have to look at the trend though. We're looking for a longer term trend, and hopefully the unemployment rate will dip below 9, and you'll see the higher employment numbers next month, hopefully.
And also, we listened yesterday to Ben Bernanke talking about inflation. Seems that there's no any risk of inflation here in the U.S., but we've seen like a lot of commodities going up,
Yes.
great, like crazy. For example, cotton, oil.
Go down the list. It's copper, silver, cotton, oil. All the commodities have been, the prices have been rising over the last couple of months. That will put some pressure on prices. I'm sorry that the chairman doesn't feel that there is going to be any risk of inflation. I do think we'll probably see that inflation situation step up a little bit more because those prices will eventually filter down to wholesale prices. So I do expect that to go up.
So how do you feel about all these prices going up? How are going to affect the stock market here in the U.S.?
Well, it just seems like no matter what news we get, and inflation's always a scary thing, but I think a bigger fear for the U.S. economy was deflation, and that seems to be taken completely out of the picture. So, inflation, when you see inflation, companies charge higher prices, you'd hope that there will be more profits in there. So sometimes inflation actually does help the stock market. Doesn't help the individuals, but the market does usually respond fairly well. The problem with the market is if inflation becomes a little more than the Federal Reserve is expecting, they will raise interest rates, and that might change the whole look of the market.
So when do you think Bernanke is going to start raising the interest rates?
Well, that's a funny question because I've been thinking about that, and I do think that at some point, probably in June or July, one of those Fed meetings, they're going to start talking a little bit. I think their tone is going to be towards the bias towards raising rates, and they might even do it sometime in the summer. Because I do think one of the main things about inflation is wage inflation, and with unemployment at 9%, you're really not going to have that wage inflation. But I think as the economy starts expanding and that number starts drifting down, you will see more pressure on wages, and then the government, the Fed's going to have to act at some point.
And also, we're seeing like the euro strengthening again. You say that inflation here in the U.S. maybe could be good for stocks. Do you think that right now foreign investors are going to start looking again to the U.S. markets?
That might be what you're seeing. I mean, the market's been up. We've had a fairly really significant rise over the last month and a half, and I think that is foreign money. I don't think it's U.S. money all that much. If you look at the net inflows in mutual funds, I mean, even though it is a positive, it's really $8 billion or $10 billion last month. That's not really a significant amount of money. The money that's moving into the U.S. could be Chinese, could be European, it could be, from outside this country. I don't think it's a U.S. Investors investing in this market. I think it's outside the country.
And just a last question. There's been a lot of business about muni bonds after Meredith Whitney's analysis. What's your take on the muni bond market? Do you really feel that there's going to be a collapse?
I don't know about a collapse, but I think the Fed is very aware of these municipal securities, and there is a bit of a higher risk on them, and I do think the government is looking at it. Myself, personally, I am invested in muni bonds, so I'm trying to get out of them. I'm trying to lighten up on that because I do think that I think there is a possibility, not so much of a collapse, but I think the values and valuations are going to go down because there is a higher risk of default with, state and cities having trouble meeting budgets. So I do think there is a much higher risk than there was last year.
And as today, short term, where should we invest?
Well, I'd still invest in this market. I've been bearish for a while. I do think that we are on an upswing. We will have a little bit of a mild correction at some point within the next couple of weeks, but I do think the bias for the next 3 or 4 months is up. I mean, the earnings, you're seeing stronger earnings. These companies have a lot of cash on hand. That could mean a lot of good things for U.S. equities. So I still think that we should, money should be coming into the U.S. equity market.
So thank you, Tony, for your time.